Hey guys, it is Lynx Savage with Brutal Lynx here. Hoping that get rid of some of the sun glare. This is such a bad lot in the morning. So yeah, update on the house is that we finally have a closing date, which is great. That closing date is next Wednesday, the 9th. And in such, I figured I would share the actual experience of going through a mortgage, getting a mortgage, stuff like that. So if you've watched the first couple of videos, you already know that there are a couple different mortgages that you can get. You already know about your credit. You already know about assessing your situation, liquid assets, stuff like that. If you don't know, go back a couple videos and watch those. So what you want to do is, once you hit a goal of your credit score being above 750, why 750? 750 is considered good credit. If you have 753, you go into the excellent credit mode. You want to hit excellent credit. So if you are in a credit place where you are at 740, you're not ready yet. Keep going till you hit 750, because while that's good credit, it's not great credit. Why do you need great credit? Not just so that they will lend to you. Yes, if you have bad credit, they probably won't even look at you twice. But you also want good credit because you want a good interest rate. People who borrow money and pay that money back on time without issue, they get great interest rates. Now, if you're going for an FHA loan, I believe the lowest interest rate you can get is something like 3.28. I qualified for 3.28, but I wanted more money back because we have a lot of repairs to do and stuff like that. So I wanted more money back. So instead I opted for the 4%, which is still really good because I was able to qualify for a 4% fixed rate. If you don't know what a fixed rate is, a fixed rate is a rate that does not just jump all over the map on you. A lot of the problems with these bad loans that caused mortgage getting to be such a pain in the ass had a lot to do with mortgage rates going up and people not being able to afford it. So of course they default because they can't pay because their mortgage rate jumped up. That's usually an adjustable rate mortgage. They call it an ARM rate. Adjustable rate mortgage. ARM. You don't want an ARM. If this is your dream and you have no other choice, fine. Deal with the ARM and you will do something later on called refinancing. Otherwise, what you want is a fixed rate mortgage. Fixed rate mortgage is different. They give you a rate, and that is what that rate is. That's what that rate is until you decide to refinance out of that mortgage and into another one. So with excellent credit, 750, 751, 752, you can qualify for a fixed rate mortgage. This is why we're concentrating on that number 750. Whatever it takes to get to 750. If you have a remark, get that shit removed. Don't apply for cards. Don't buy a new car. Unless it's an absolute emergency to buy a new car. Do not buy a new car. Why? If you're struggling to hit that 750 number, understand that even though it's only a small percentage of your score, every time someone checks your credit, it's a hit to your credit score. It can go down by a point. Sometimes, most mortgages, they don't want to see more than 7 hits on your credit report within a 2-year period. Now, if you do have more than 7 hits, this is when we go back to being prepared and writing those letters of explanation. Because I had a lot of hits on my credit report over the past 2 years. And these were, jobs checking credit. When I was applying for school loans, they would check your credit. When I bought this car here, we weren't planning on moving then. We weren't buying a house when I bought this car. And when you go to buy a car, you'll have 3 hits or more because they're trying to find you the best loan. They're trying to get you into that price that you want. So they're checking around with different banks, and each bank is going to hit your credit. They're going to check your credit, and it's going to be a detriment to your score. It's also going to look bad to the bank. So in my being prepared part, what did I tell you? Write letters of explanation for everything that's a little wonky. Having a whole lot of hits to your credit report, like a whole lot of credit checks, hard credit checks on your credit report, looks wonky. So you are going to want to explain all of them. All of them. So in my case, I had 3 hits just for the car alone. Those 3 hits, I put them in one single letter, said, this check on this date, this credit check on that date, and this credit check on that date. They're all the same. This was when I purchased my car. That's it. So that way they know, oh, okay, he bought a car. This wasn't him trying to, get a shit ton of credit or go for credit cards and all that other shit. If you have anything for credit cards, point that out. This credit check on this date was, I applied for this credit card and got the card. This credit check was for school loans. I went back to school, and that was 2 years ago, and those things still hang out on your credit report. So you want to make sure that you're prepared and just write those letters of explanation to hand over to your loan officer. That's explaining things that are wonky, but get to that magic number, 750 or higher, so that way you get a great rate, and you qualify for more. Especially if your debt-to-income ratio is small. Debt-to-income ratio would be how much is your rent? Do you currently pay a car payment? Do you have a mortgage somewhere? What are those absolute every month you owe this debt? Do you have $10,000 in credit card debt? They're going to take that number and they're going to compare that number to how much money you make every year. And how much money you make every year compared to, that's your debt to income ratio. Do you have more debt than you have income? Do you have less debt than you have income? Do you have way less debt than you have income? Because the reality is that I have very low debt. In terms of credit cards, those are mostly all paid off. I have one credit card that I use for revolving credit. Remember we talked about this, revolving credit. I have one credit card that I use for revolving credit. I think it has like an $800 balance on it. And it's like, and that's just, we pay it off just so that way it shows that I have credit and that I am paying it faithfully, no problem. And it's an $800 bill. If you want to get rid of it in one snap, we could. So you got all of those things going. You have your credit cards. You have your credit in check. You've got your debt to income ratio down pretty low, where you're really just paying a small rent every month that is going to go away once you buy your home and everything else. Then there's a time to shop around for your mortgage lenders. Now, like I said before, a lot of these, what are they called? Real estate agents. A lot of these real estate agents work with credit unions, banks, stuff like that. And a lot of these banks also have buddies at other banks. So you want to get in good with your real estate agent. Don't be a bitch. All right? Don't be a bitch. Don't be a pain in the ass. You want to be in good with your real estate agent because that person is on your side and they have resources you do not. It is a good idea to shop around and all that other bullshit, but what you're going to find are people who want to rip you off. You're going to find Quicken loans and shit like that. No. Ask your real estate agent if they have anyone that they recommend. Usually, that loan officer that works with that real estate agent has a stake in this as well. I mean, they get a commission if they get you the loan. They're going to want to work a little harder because they're friends with the real estate agent. They don't want to fuck up their friendship with the real estate agent. So shopping around is a good idea. You don't want to just look at the first thing that you get and be like, yes, that's it. But definitely talk to your real estate agent. 9 times out of 10, you won't have to shop around. 9 times out of 10, they work with someone who works with a mortgage company that's just going to turn around and sell your mortgage to someone else anyway. So they will work to get you the mortgage. This process is such an emotional roller coaster. Be prepared for that. Be prepared to know you're going to be pissed. You're going to be angry. You're going to have second thoughts. You're going to want to give up. There came a point in time, mind you, when I say I was prepared, the mortgage, the loan officer said, and I quote, "I wish all of our customers was this easy." I made it easy for him. And if that was easy, I hate to see what it is like if you're not prepared. Because all those letters of explanation, everything, I had it all. When he asked for something, he got it that day. Not just that day, usually within a few minutes. You have to let the people at work know what you're doing. Let them know that you're buying a house. Because with that is implicit that you're going to be in need of, coming in a little late or leaving a little early or taking an hour or two in the middle of the day to run back home, get that piece of paper, scan it, and fax it over. If you don't communicate with your job, this is bad, okay? He was telling me stories about stupid things that people do. Like, they'll get the commitment letter from the bank, and then they'll go out and run up their credit by buying a whole lot of furniture and everything else for the house. And the problem with that is you just increased your debt-to-income ratio, which changes what you qualify for, which also changes what you can buy. So during this process, you can't spend a motherfucking thing outside of the essentials. Your normal bills, groceries, that's it. You can't use your credit card. You can't spend a whole lot of money out of the bank. You can't do any of that shit until this is over. Now, there are a lot of places that will do a offer to closing in 3 weeks, where you make your offer and 3 weeks later you're closing. Some places can do that. Most places don't. It takes a really long time to get your loan package together, to coordinate. You have to be a manager, okay? And you have to still do this while performing at 110% at your job, because you're asking your job for an extra leeway. So you can't fuck up on your job either. People have quit their jobs a week after. You can't quit your job a week after you get the loan, because they do verification of employment by voice 10 days after you get the loan, after they actually disperse the money. They could recall that loan immediately, and you have to pay or give up the house. So understand what you're getting yourself into emotionally. Understand that the sacrifice you're going to have to make just to get this is going to drain you. Managing everything is going to drain you. You have to manage your real estate agent, the loan officer, the lawyer. You then are going to have to manage later on the seller's selling agent. You don't have to really manage the seller, but because you probably won't even be in contact with the seller. But there will come a time where there needs to be amendments to the contract, and you have to be able to manage it to get it back in your possession as fast as humanly possible. Because the faster you get it done, the faster you can get to closing. Why do you want to get to closing so fast? Anything can happen in between the time that they say they'll give you a loan, to the time they give you a commitment letter, to the time they actually close on the house. Anything can happen, and you want this done as quickly as humanly possible. You don't want to languish around and, because anything can happen. You can have an accident. You want it done as quickly as humanly possible, which means you have to be on the ball. You being on the ball means that you have to have everyone else on the ball. So you have to be a good manager. If you're not a good manager, you will become one after this. The emotions are insane. I am so glad that we're closing next week, but even that feels like it's too far away for me. I'd rather be closing this week. A lot of it is hurry, 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 then sit and wait. And during that waiting period, you get no information, nothing, not a word. You'll panic. Don't. No news is good news. A lot of times people say, no, don't be passive, blah, blah, blah. No news is good news. Because when they have a problem is when they will call you. So you don't want the calls. You want to wait. Again, be prepared. It's an emotional roller coaster. In my case, they had nothing to go after. I think the underwriter was just having a bad week. I don't know. She had nothing to complain about. So she actually attacked my letter of intent. Yes, you will have to write a letter explaining what your intentions with the property are, whether those intentions are to live there, if they're to live there, why are your intentions to live there. She went after my intentions because my husband owns a 2-family house. And they want to make sure that we're just not collecting properties. And the reality is, I mean, in reality, we kind of sort of are collecting properties because we're not selling the other one. We're buying a new one, but we're buying a new one for us to live in and rent out the rental unit. So there was a whole thing with that, and yeah, you don't get enough information because the underwriter is vague. You end up trying to write a letter addressing an issue you don't know. And then after that, there's more shit like, well, do you have compensating factors and stuff like that? If you don't have a 401k, learn from my mistake. If you don't have a 401k, get one. Get one. They gave me the hardest time because I did not have a 401k at the time. I got one now. I set it up at work. They went after me because I didn't have a 401k, and the 401k is just an additional asset. And because, the 2-family house, the loan's not in my name, so it doesn't count as an asset for me. I had no real assets except for the money that was in the bank. If I had a 401k, I wouldn't have had to go through the bullshit of having to get my job to write a letter saying that, I do have, a bonus program and that I'm eligible for it. Yeah, I had to go and actually have HR write a letter about this stuff. So learn from my mistake. Get yourself a 401k. Even if your job doesn't offer it, get one anyway. You won't have the employee match, but you at least have it, and that's better than not having it, trust me. But that's pretty much it. I mean, there comes a point in time where it's out of your hands. They have all the documentation that they need. You've given them all the explanation you can give them, and they can still tell you no. This is the part of the emotional roller coaster that's the worst. They can still tell you no. They can still say, nah, we're not taking this loan. And you will have no idea until the moment they figure that out. And that could be up until a few days before you close. So there comes a point where it's out of your hands and you just have to be okay with that. But yeah, so hopefully the day that we close, I will try to take video of us getting to the closing. You won't have video of me signing or anything. Well, you might, who knows. But I'll try to get video of the actual closing so that way you guys can see the process of closing and what that process is like. From what I understand, it's really just sit there and sign. But that's all I got. Hopefully you guys can get some kind of something out of this information because that's why I'm doing it. This information is important. It's information that can help you. And that's that. Be sure to like, share, subscribe. Be sure to like the Brutal Lynx fan page. You can find that at facebook.com/Brutal Lynx Bear. Yep, that's it. You can also follow me on Twitter at Lynx Savage. And don't forget to check out the Big Boy Project, which you can also find them on facebook.com/The Big Boy Project and here on YouTube as The Big Boy Project. Pardon me. Be sure to like, share, and subscribe. And that's it. Hopefully this information helped somebody out. Who knows? Talk to you guys later.